Very excited to welcome Ferg back to the show. It's always a great opportunity to speak with someone who has the mindset to master markets, who doesn't listen to the market's BS, all the narratives, and who can actually find deep value. So, Ferg, you're always finding deep value. Welcome back to the show.
Thank you for having me back on.
Super pumped about this because I think the first time we talked, you were talking to me about like coal miners, and I'm like, what? And like, it worked out because that was back in 2020. That was before the uranium move, a lot of the move of commodities. And the trade absolutely worked out, Peabody Energy. We're in a completely different macro environment. Everything is down. Maybe the stuff you're in, not down as much as the high-flying tech stocks, but you also warned against. So really want to understand kind of what your take is, high level overall in the market right now to start.
Well, it hasn't changed too much. Honestly, I still love coal. I just think we're in this kind of this illusionary period where we think we've fixed the energy crisis and nothing's really been rectified. It was just pure luck that got us through. We got Europe in particular through the last winter with not only the sort of warmest weather in sort of 40 to 50 years in quite a few countries, but also China being in lockdown, so really cutting back on a lot of their energy consumption, especially LNG, that freed up a lot of shipments to be moved to Europe. So I don't think they learned anything. I think you recently just had like a 2-hour chat with Alexander Studhill, and he's just run me through all the metrics going into this winter, and it's they're in strife if they even get a standard winter. Like there's a lot of sort of embedded assumptions whether like storage will be enough. Well, they've only got sort of 60 days of storage, where obviously winter can 180 days. So it's become sort of a flows problem. If it drags out, they could easily run out there. There's a sort of assumption that they can get enough LNG, whereas because of their sort of climate goals, their net 50, they're unwilling to sign the long-term contracts, whereas China is just signing everything that gets put in front of it. They're just locking in sort of 27, 30-year contracts with Qatar, and they're just soaking them all up. And Europe's still just sitting on its hands. And so unless we get another mild winter, they're in trouble. And that just points back to coal. I love coal as a way to play TTF. It's just, I've always sort of said it's like the kind of like LNG without all the infrastructure. You don't have to have all the fancy sort of gasification or regasification plants, expensive LNG tankers. You just dig it up, put it on a ship and dump it in front of a power plant. And so high energy coal, I think, is as attractive as ever. And I think there's some really nice setups here if you know kind of which companies have got the right setup for it. So that's kind of the energy view. I think oil's as interesting as ever. The Saudis aren't playing the game. They're just kind of calling the bluff. I think there's a great interview with Luke Groman that was recently out on Wealthion. And really recommend everyone watch the last 10 minutes of it. And he's just pointing out the fact that essentially the supply destruction, like everyone sort of holds up, pretends that sort of a recession will offset, will kind of save us. And looking back, most recessions didn't really do much to energy demand. And so you've got it goes back to the pretty nasty recession in 1980 that was 4% down. GFC was 3% reduction in energy demand. COVID full lockdown 2020 was only 8% down. And yet you've got shale, which is looking to really heavily roll over. And that's been pretty much all the additional energy added, all the additional oil added over the last decade, more or less 90 odd percent. And that's going to start rolling over sort of 20 to 30%. And so you've got this interesting case where even if the oil bears are kind of correct, then shale just gets hit even harder and rolls over even harder. And the the result further out will be even nastier. And so I'm really trying to find every ore bearer I can talk to at the moment because I just want to kind of wrap my head around the shorter term arguments. And most of them agree that yeah, the longer term setup is even more bullish. The more bearish you get on the short term, the more sort of bounce you get longer term. And so yeah, that's another one of my favorite trades, whether I'm playing that via offshore, whether I'm playing that directly with calls on WTI. The volatility just hit an all-time, not an all-time low, but like a low since 2017. So those are super attractive, even with the recent rally. And yeah, uranium's finally starting to figure out that there's not enough and starting to catch a bid. So it's all looking great, honestly. Yeah, I'm just sitting back and enjoying the ride now. Most of the positioning's done, and yeah, I'm looking forward to the next sort of year or two.
Yeah, no, you're right. It actually is working out really well. So this is the setup. We had the war in Ukraine. You're right. That caused just a massive spike in the winter. I think was it last year. We just the winter, the war in Ukraine caused a massive energy crunch in Europe. You're saying they're headed for pretty much the exact same thing again, in theory?
Probably not as bad, but yeah, it doesn't need to be as bad for still to make a lot of money. I'm just saying,
Yeah.
who knows what the weather does. There is some. I was just reading a report before on like polar vortex, and yeah, I don't know. I always take weather, long-term weather forecast with a pinch of salt. I just say it's a coin flip, but a lot of the stuff I'm in, it'll work. Like I'm not making bets with like an option that expires right in the middle of winter. Like this is stuff that I want to own for at least a few years. And if we get a cold winter, it's just going to be Christmas. But if we don't, it'll be fine. All this stuff makes a lot of sense, and the fundamentals are only getting better. And yeah, the Saudis are just really calling. Like there's a great speech MBS just gave where he's like he wants Saudi to be the next sort of Europe. He's saying like this is my war. I want to see the Middle East come out on top during my lifetime, and kind of makes sense what he's doing as well. If he can see that they're ultimately no one else, like especially US, is doing everything to kind of curtail production. They're not encouraging shale to ramp at all. Like, why should they? Why should Saudi sort of ramp to cover them? So ultimately, they're sort of pushing forward all these reductions, whatever it is now, 3 million barrels, because they're going to get a higher price, and they're going to get a higher price for their oil and keep some more reserves in the ground. And depending what you think of Saudi, I think they have been overstating their reserves for quite a long time. It's all kind of a what do you call it, like a shadow game with the valuation of Aramco, with only listing a tiny amount on their domestic market, and then having a few wealthy people prop it up. And like if you dig into it, I forget, something silly like for a company that's supposed to have a $1.7 trillion market cap, there's something like 50 million trades a day. So it's just it's just a tiny little corner, and they're trying to prop that up, and I think they're going to try and float more of it. But yeah, it's interesting because as soon as they tried to IPO it originally, everyone just said that's a bullshit valuation. Show us your reserves, and they wouldn't. So yeah.
Yeah, I thought Dan Pena was like they're never gonna IPO because they have to prove their reserves, but they actually did have like they IPO'd and they were audited. Didn't they have to show their reserves or no?
Well, the I think it's Go Rose and Adam. He said they did actually have to have an audit, and they had an audit, and it came in well below their reserves. They accepted the audit, but they never updated their numbers. It was just like, yeah, we don't have quite what we say we have, but
Oh,
yeah, just move forward. So
absolutely huge. Okay, so overall, you just think energy is going to get more expensive because you're saying leadership in the West keeps making policy errors and not investing in it enough, right?
yep, that's the basic thesis. Is you just like I wrote a piece on my Substack that was just like coal is a beneficiary of dumb energy policy, and that's it. Like if we're doing smart stuff, it would just be nuclear. It would be accepting going to have another like build out similar to say France, and just rapidly ramp nuclear and be able to build out the sort of electricity grid that way and add a lot of transmission. But what we're doing, well, you've already seen it fail, and it's kind of interesting because it's starting to get covered by the media. Like more and more of these failures with the wind turbine manufacturers. Like you've seen Virtus, that absolute basket case now. I think they had to raise prices like 40%, still ran a negative 10% margin. You saw Siemens Energy, they're having massive, I think they took $2-3 billion loss, and their stock got cut in half on a whole lot of recalls of a lot of their parts are failing in the first few years. And what was the latest one was blanking on the name, but the CEO in the US just said if they don't get more subsidies, they're going to pull the pin on a whole lot of their energy of their wind projects. So pretty much saying, yeah, we're not economic unless you subsidize the hell out of us. And so, yeah, it's starting to be more out in the open that this stuff isn't working, and yet none of the projections are changing. We're still a lot of the sort of, whether it's the IEA or Bloomberg, NEF, they're all sort of still pretending we're going to be running on mostly wind and solar in another few decades.
Wow. And I just pulled up a chart of ExxonMobil hitting an all-time high like this year.
Mm.
Who'd have thought? Like, it's crazy. You're right. Energy is just absolutely crushing it right now. So there's a reason.
Yeah.
And so I guess the question is, people got really excited about natural gas during the Ukraine war. It pumped, but then their inventories filled up really fast. I mean, I guess it all has to do with their inventory levels. Like, will there be a crunch?
Mm.
So is
Mm.
the risk of kind of as an investor, maybe them getting supply super fast and price falling?
Yeah, well, that's always it's always the way with gas. It's always just in time, so it will spike, and then yeah, once the winter eases, it'll fall off again, and it'll just repeat until until the issue's kind of fixed by having more power in the winter. But it'll be interesting because this time round it won't be like last time. They could just blame it all on Russia, and now they've had this time to kind of fix it, and they won't. There isn't anyone to sort of there isn't any clear blame, and so the questions really will be why isn't this been rectified, and are we really in sort of I think there'll be far more questions asked if we have another sort of a few more spikes going into this winter again. And that is what kind of really been looking for is when are the sort of the blinders going to start coming off the sort of the extrapolation of the green sort of energy trend, like whether it's like another interesting, you've got gas, you've got oil, which most of the projections were that it would be 105 million barrels by 2030, or we're going to hit 105 by next year. And so that's given a lot less runway for whether it's the EV transition or the build out of wind and solar. And a lot of the stuff hasn't even, like the amount of cost inflation that'll run through to renewables and EVs if oil really takes off, which I'm betting heavily on. It's gonna break a lot of the stuff, and that'll be interesting when forecasts have to start reflecting reality. Like you could pull up one of those. I've got a ton of the charts, but the typical chart would just be that we're going to be pretty much having got rid of oil, coal, and gas by 2050, and it's all wind and solar. You can just they'll have to like work back those figures to be maybe they'll try and say it'll be 1/3 wind and solar and 2/3 still fossil fuels, or there'll be some work back, but sort of waiting for that. And then as soon as that happens, then they have to face the fact that we need to find all these fossil fuels. Like dramatically underinvesting in all of this stuff. And so like the decline rates in oil was sort of 8% a year, and gas isn't too far behind. The gas is I think it was 3 or 4% declines. And so yeah, it's there's a dirty big gap opening up, and prices are just going to have to incentivize us to find more supply.
Yeah. So, okay. So you're saying the trend is supply going down and demand, you're saying steady or going up. So you're saying the gap is
Yeah,
what, no matter what
yeah.
happens. Interest, and that's just because of underinvestment. Okay, then my other question is the Saudis. So we talked about them a little bit, but I just saw this piece. They were saying that the Saudis are raising the price, they're cutting production, and it has to do with the relationship with Biden. Like they don't maybe respect him enough to increase production to lower global prices, and so maybe that'll be a problem in election year. But it's almost like, is it all at the whim of the Saudis to like, are we just hoping that they pretty much aren't manipulating the price in a certain way? Like, is that what it's all about?
I think it's a bigger game than that. I think it's one of the first things to point out is the relationship between the Saudis and the US used to be the fact that the US was the biggest buyer of Saudi oil. So if you go back, it was like 80s and 90s, the US was buying sort of a quarter, maybe just under of Saudi oil. Now US is buying sort of 7% of it, and China's now buying 23%, I think.
Oh,
And so the Saudis are no longer answering to the US. And also the kind of the relationship there with like providing weapons and sort of peace, like they're questioning that as well. Like having seen what happened in Afghanistan, having seen like with all their high tech equipment, they couldn't even stop a few of the drones hitting their refineries. And so they're kind of seeing that the game's changing there. And so I just think this is all like they're looking out for their own best interest. And this is also reflecting what they're saying. Like they are sort of saying like almost a Saudi first policy. Like they're not going to curtail to US's needs. They don't care what Biden wants. It was kind of fascinating to watch that whole like fist bump. Like that was the most cringe thing. There was a great meme that went round after that when they did the fist bump, and then Biden's like, "I'm going to keep cutting supply," and EBS is like, "I'll keep cutting supply as well," even though the meeting was about increasing. Yeah, so yeah, and it makes perfect sense for them if they are overstating their supply, then why not why not boost the price and keep more reserves in the ground and help fund? They've got some pretty he's got some pretty lofty what do you call it like plans with what is it I always forget the name, Xeon, like the city he wants to build, and yeah, so that they want a higher price. And if they work out there, they're sort of, yeah, they're being put in the driver's seat with it. You can expect them to drive it up. They just want to make sure that shale's dead. It's pretty dead now. Like they've worked for all the drill bit uncompleted, and I don't think it's coming back. Yeah, I think we're just going to continue seeing it roll over.
Yeah. Okay. So much to unpack. So you're right. So it's fascinating. Yeah, the people that control the price want it to be higher. Period. And
Mm.
reason for them to lower it. So that's good news. But then but then all these oil stocks are like Cheniere Energy. The charts are all up. So how would an investor like take advantage of this? Or do you think there's just like an exponential upside move at this point? Because oil's high already.
Well, yeah, when I'm being negative on shale, not being negative on the shale industry, that the remaining guys that are in the Permian are doing great. They're not doing the sort of the drill baby drill. They're
Yeah.
just now concentrating on profitability. When I'm being negative on shale, I'm being negative on them actually growing. Like now that work through the ducks, they're going to continue rolling over. You've seen like the Balkan, Eagleford are all rolling over. It's only really the Permian that's holding up, and some of the research I've been reading, that'll probably start rolling over early next year. That's the last. It was the last sort of possibility of growth, and so when that starts rolling over, like with all shale, this isn't conventional. This isn't sort of a 10% decline year after year. This is, yeah, sort of big declines, whether it's, yeah, um, 30, 40, yeah, depends what year it's in. But yeah, it's a huge issue. But that's not to say there isn't money to be made in shale if you're hanging out in some of the Permian stuff that's now really focused on profitability and coming off a low base. Yeah, I think that's some of that stuff will do really well.
What if Trump gets in office and,
Hmm.
and all about just like pumping out oil, being energy independent? Does that change anything for you?
Um, Not really, because it'll be too little, too late. Yeah, it's you can't bring these long cycle projects on because that's what I think has to fix this long cycle. It's offshore. Kind of already gone through all the you've already high graded all the shale stuff. So all the like the high quality shales been high graded. So even if you threw a lot of money at it, you still wouldn't you wouldn't get the sort of the ramp that we saw before when they were um, first started throwing money at it. Uh, yeah, I think it's going to take a long time to fix it. And that's why kind of I'm more bullish the offshore sector. I think that's where all the discoveries are, and a lot of that stuff due to it going through kind of a bankruptcy cycle. It's come way down the cost curve. It's actually lower in the cost curve than shale now,
Mm.
and similar to like even the Saudis, like why are they out picking up all the call it the buying up all the rigs for their sort of shallow offshore. And so why would they be doing that if they had plenty of supply with their more conventional assets? And so yeah, I think we're in for a rough time. The gap's gonna deficit's gonna blow out, and it's yeah the price will have to incentivize more supply, and it'll yeah I think we'll see definitely double digit oil next year, if not yeah like really have a decent run. But not double digit, sorry, triple digit. Yeah, double digit. Yeah.
Growth, but
Mm.
okay, yeah, it makes total sense. So I guess the question is like, where is their deep value? I always like and I'm so interested in these pipelines because they give off like 15 or 10% a year in cash flow dividends. What do you think about pipelines? Have you ever looked at those? Like the transport?
Yeah, I have. Yeah, it's great assets if you just want an income stream. I don't know why you'd own them over coal. I think coal, you get even higher income streams, you get buybacks, and you get it at a lower valuation.
Hmm.
So that's my kind of pipelines is some of these just cash cows of coal companies. I just see them. I see them just absolutely throwing cash out for years, and there's no kind of institutional ownership. So um, it's just going to be buybacks and dividends, which will be a lovely few years.
So that's kind of what the way you're finding value, coal and offshore, essentially. Still,
Yeah, the coal offshore, uh, doing option trades on WTI, and still got my big basket of uranium stocks that I haven't really touched since 2020.
nice. Okay. Yeah, that's when we started talking. Peabody Energy was like $1 or $3 back then. Now it's 24. So the market's picking up on this. I guess what you're saying is there's more upside in energy assets going forward.
Yeah, yeah. No, this is still early. Like
Okay.
none of this. Like that's the other thing with like kind of coal. Even Newcastle touched what was it 400? There were capex went down. Like nothing's been solved on the capex side. There's been no real jump in investment. Uranium's certainly not been solved. Oil's just getting worse. Coal's, yeah, I don't even know when money will start to flow into capex coal. Like if anything, everyone's trying to offload their assets, and if they can't offload them, they're even talking of trying to like high grade them. Like BP's talking of trying to high grade the last of the coal assets on its books, like just get them off, work through them, and yeah, it's gonna be interesting with coal consumption sort of set an all time high, and I think it'll continue to set an all time high for at least a few years to come. Yeah.
That is such a massive statement. Coal consumption about to hit an all-time high, meaning demand.
Yeah, well, it has. It's not about, yeah, it has. This year was an all-time high. Yeah,
And that's globally, right? What
yeah.
about in the West?
Oh, West is dropping off. Yeah,
Hmm.
but yeah, the West doesn't matter. Like China's building 2 power plants a year. Yeah, two a month, 2 a week. I think it is. Yeah,
Wow.
it's it's almost irrelevant. It's always this mistake of thinking that the West matters. But the West is so irrelevant on a population basis. I think Putin gave a great speech where he's talking about like the golden billion, like why the West thinks they're so special
Yeah.
when, like if you go through all developed markets that are like 1.3 billion people, like demographically we're going nowhere, but why we think we have the right to tell the other 6.5 billion people what to do with their sort of energy policy, which is directly tied to their standard of living. And not only that, but they're demographically going to add another 2 billion people. So not only are they, even if their energy consumption was going to stay status quo, they're still going to add another 2 billion people. And then they're still at the, like, if you want to break it down in energy terms, like we're consuming like 13, the energy equivalent of 13 barrels per person in the West, whereas in developing countries, they're at about 3 and they're making all that shit. And then they're going to add another 2 billion people. So that's going to double the energy system just alone on those, that growth in demographics. And then you say most of these countries are trying to climb like into the middle class. So you got like China, got India. So if that 3 barrels per person per year goes to 4, then that like doubles the entire thing. So that's kind of the maths. And yet it seems every second piece is just talking about what the West wants or what the West is trying to achieve and talking about some wealthy people cutting back a little bit. Yeah, it's not what's actually happening.
Okay. So don't watch Western mainstream media if you want true insights into the energy picture. It's not a good idea.
Yeah, yeah. We'll use it as a contrarian sign ultimately. Yeah.
But okay, so then you're saying if you want to play cold, don't go after the ones necessarily serving the West because politics won't really allow those much growth in theory. Maybe go after the global one.
Well, well, there aren't really many that are just directly serving the West. Yeah, I think there is probably a coal glut coming in the US. So be careful of
Oh,
domestic coal names. Yeah. So I'd steer clear of that. But anything that's seaborne, I think will do amazing.
okay.
Yeah.
Okay, perfect. Okay, I think that covers things. And then now moving on to uranium. So are you convinced? Because again, people always forget, like they hear there's a supply crunch, but they're skeptical because they don't see just an exponentially booming price per se. And so are you fully convinced? Have you done the math that there's a radical supply crunch, which means in the near term, the next few years, there's going to be serious buying pressure, essentially?
Yeah, I think we might be seeing the start of it now. I think the it's kind of been a broken record on it. Like you've been able to see that there's kind of somewhere in the range of 40, 50, maybe even 60, I think deficit, and that's been the case for the last few years. But just been working through, I guess, underappreciated how much sort of mobile inventory was out there, and also how sort of opaque the whole thing is. Like this market's so, like most other commodities, there's at least speculators involved in it that can have some sort of price discovery, but there's almost no price discovery with uranium. So you kind of just finding out now that the contracting is really starting to ramp up, with utilities. Like I think it was for a few years there was down in the 30s. Now last year was 65, and then it's probably going to be higher than that. And then if you look back at the last cycle, they don't just contract what they need. When they panic, they contract double what they need, even higher. I think I've got a chart somewhere that shows like the the vast majority of the contracting was done actually at the highest pricing. So they all panic and fall over themselves to buy up the most. And it's just it's kind of a frustrating market because there's almost no signals that come out. And even some of the signals that do are just bullshit. Like there's some really weird quirks with uranium in that the when term contracts even get signed, the price that gets listed was the lowest offered. It's not what it actually got signed at. It was like it's just like I don't even know how they came up with that. It was supposedly that there was a liquid offer at that price, and so it could have been filled at that. It was like, oh, that makes no sense. Why don't you show what it was actually filled at?
Right.
Um, Spot markets kind of dried up. Like it's there's not a lot there. Yeah, I'm super bullish, but I'm not obviously doing much. I'm just letting it play out. Yeah, I think it will continue to get squeezed. The time frame, don't really know, but it looks great to me, and pretty hopeful. Just going to continue to get great price action for the next year or two before it ends in something sort of silly.
You're right. It is proving itself out a little bit. Like if the market wasn't tight, we wouldn't see the rising prices right now based on
Mm.
small development. Like what is it? Cameco, like they're scaling back production at one of
Yeah,
their
they just dial back. Yeah.
that's causing things to go up. So like it is very sensitive, it seems, the market. So that's kind of proof that it's tight.
Well, it's just the fact there's a dirty big deficit, and it's going to matter at some time. At some point, there's similarities between shale. Like it's. I'm trying to think of a decent analogy for it. It's kind of like if you're a retailer and you're just working through all your inventory and you're pretending that's your margin. That's what shale was doing with all the ducts, the drilled but uncompleted. Like if you're including all this like inventory that you got in the back office and you're pretending that's in your margin, then once you run out of that, you're gonna have to restock. And
Yeah.
then if you find out you can't get any stock from anywhere, then suddenly like your whole game's up. And that's kind of what's happening with shale, like work for ducks, and that's what's happening with uranium. They've worked through all this kind of mobile inventory, and the utilities can't really run like they can't chew through too much of their inventory because they've got to keep at least sort of 2 to 3 years on site. They can start to dig on that, and then when you put uranium into the fuel cycle, you need at least 2 years to run it through the fuel cycle. You don't dig uranium out of the ground and throw it in the reactor. You've got to take it right through fuel cycle and turn it into fuel rods. So it's complex, and it surprised me how much mobile inventory was out there. Just I really underestimated that. But now that seemed to have worked through it, then that deficit's really going to matter. And it's quite different to what we were facing in the sort of the spike in 2006, 7, 8, because at that point it was you could always look forward and the market was always in a surplus. It was quite a hefty surplus actually, but even when was it Cigar Lake flooded, it was still, and at no point did it come anywhere near a deficit like on whatever time frame you went out. And now, yeah, take a pick. Like as I was saying, I think each year we're running, next year we're running 50, 60 million pound deficit. Whereas back then, if you were looking out, you would have been 100, 200 in surplus. And so this is similar to oil. Just keep going back and forward between them. Like previously, a spike could happen and it could come down because there was no structural deficit going out. It was just sort of a temporary shortage. And so there was nothing that actually had to be fixed, which is what makes this even more kind of intriguing, is the fact that like we're going to need higher prices to incentivize and fix that deficit, which is going to take time. So you can't just have a spike and then a little bit of supply comes on and it all gets sorted. This is going to have to be a far more prolonged sort of bull market because more supply has to get brought on to fix this issue.
Wow. And see, that is the bottom line because the bears of energy and oil would say, like what the opposite of what you just said, that a spike in price will cause all this production and it will all go back to normal, which actually did happen short term. But you're saying long term, you're just looking at like the next decade or so, even in these assets.
Mm.
And that's what not a lot of people are doing, looking at these as long term investments because they think it's
Yeah.
yeah.
Yeah, well, most people just want the spike and they're just hoping for sort of crypto type of gains. And yeah, I don't think that's really healthy. You need to understand the fundamentals, and yeah, it'll be interesting. Well, that's the thing. Most people get shaken out with uranium if they don't understand the fundamentals because it's been a rough ride. Anyone that's going to make big money out of uranium will have earned it because you have been in for a number of years and had some pretty rough years along the way.
Right. Well, you've been in it since 2020, and we're pretty
Mm.
really from there at this point, right?
Yeah, well, I bought my first uranium investment. It was like in 2017 or 18. Yeah, I went really heavy in 2020 with COVID, like March 2020 with COVID, and just saw prices I never thought I'd see. But yeah, I was actually just talking to my mentor before, and we first started discussing the trade in 2016. So yeah, it's going to be coming up 8 years. So to put it in context, yeah.
So you've done well. Everything's trending up. That's all going to continue in uranium and oil.
Mhm. Yeah. Yeah,
Perfect.
and coal's a slow burner. I think coal's going to be just a tobacco trade all over again. It's always the closest analogy because it just everyone pretends it's going away and demand keeps going higher. So I don't know how that's not just going to be just a prolonged cash cow that probably won't get any multiple re-rate or won't get squeezed because institutional or funds won't ever be able to touch it. Kind of like tobacco, they could never be seen to own it, and so you'll just keep getting these things just pumping out the cash flow, and they'll just pour it into buybacks and dividends, and it'll just be a beautiful like trend to be on.
Like the Altria group is one. That's like tobacco. It's just like a massive uptrend. Is that kind of what you're looking at? Stuff like that, like the historical price action of tobacco. Because you're right,
Yeah,
it's not ESG at all.
yeah, it was fascinating when you dig into the tobacco story what actually happened because every with them trying to damage the tobacco brands, like they were saying, okay, like no more advertising, and there was like fine. The incumbents were like, okay, they just had their almost monopoly cemented because like if you can't advertise, how can you launch another brand? They couldn't even. You had to be behind the counter, so you couldn't even see another brand. So the guys automatically had like a monopoly,
Wow.
and then yeah, it's like truly something to behold if you run like yeah, any of the tobacco brands. Most of them were paying, I think, somewhere like 7-8% dividends. So the charts alone are like fantastic just from buybacks. Some of them were buying back sort of single digit amounts of their own stock a year, so they had great returns. But if you do like if you have software that can run like total returns, like if you reinvest a dividend, so the charts are just absurd, and
Really?
that's what I think you could do with coal because most people underappreciate. Like I think it's with the S&P. If you look at a price chart versus a total return chart, like with the dividend reinvested, I think over a decade, like the dividend reinvested like twice the price chart. Maybe it's a little bit longer, but it makes a monster of a difference reinvesting the dividend. And then that's only what's the S&P like 2-3% dividend. Like a lot of the coal looking at is like 10% dividends, or if you go into Indonesia, you're up to like 30% dividends. Yeah.
Really? So
Mm.
it's hard to find vehicles for coal because Peabody Energy is like a domestic one, right? Are you able to like help guide people in where to look? Are there ETFs or anything in the coal space?
Well, sadly, there was an ETF and it literally bottom ticked the whole market and dropped everyone off and sold all its positions right at the bottom. That was actually what like bottom ticked the market. It was called COL, it was COL.
Yeah.
And yeah, I've got this whole like framework around like trying to track ETFs delisting because they almost always delist at the bottom. Like the recently in Nigeria, the ETF just said screw this and dump the Nigeria ETF, and so it's like, oh, that's worth a look.
Right.
Yeah, cannabis one's delisted, some
Yeah.
shipping one delisted near the bottom. Yeah, so anyway, it's um, on the other side of it, be very wary when they start listing ETFs in your sector. Like if when they relist a coal ETF, probably time to get out. If they relist sort of a offshore oil ETF, then probably run for the hills.
That's a
But
great.
mm, with coal, like it's probably probably too much to cover. Like Peabody, when you even say it's domestic, it's not really domestic. It's got a met coal mine and a thermal coal in Australia, and then it's got PRB and some domestic coal in US. So it's kind of spread across quite a few markets. So yeah, really need to know. Like obviously you got to break in between met and thermal, and then you got to work out who are they supplying with thermal. Yeah, the seaborne guys are obviously I find far more attractive. Yeah, just be very wary of domestic suppliers in US. And then yeah, from there it's not that big a list of names. Like if you know what you're looking at and the valuations are pretty crazy, it's pretty hard to go wrong.
Oh, so you're saying there's still deep value in coal miners globally?
Oh God, yeah. These things are trading at 1 or 2 times cash flow. Yeah.
Okay, sweet. Yeah, because I'm just looking at these and big energy stocks, and I'm like, why are they so high? I don't like chasing charts, you know?
Yeah, the charts have run up, but most of it's still just been valued at yeah, they're not gaining any sort of an increase in multiple. As I say, some of these are just they're mostly cash. Like a few of them I'm thinking of, yeah, at least one of them's like 70% cash trading at sort of yeah, the two for getting what multiple it's on, yeah, probably like two times cash flow,
Mm.
and has great like correlation to TTF, to like the European gas price. So that some of those are super attractive. Yeah.
Sweet. All right, and then with uranium miners, you look at the ASX miners still, or do you look at US miners or Canada?
I've got a bit across, but yeah, I'm more of a fan of the ASX. Yeah, originally, like I've had these positions forever. I think I've talked about them so many times. Like my two largest positions was Boss and Paladin.
Mhm.
Had them in big size since 2020. Decent position in global, which I got punched in the face with the coup in Nigeria. Um, I had yeah, still have yeah, just a smothering of some of the smaller guys as kind of like call options on the space, and yeah, haven't haven't really done much in the space at all, really, honestly. Just continue holding it and watching it do good things.
Yeah, just letting it ride. And so Paladin is in Namibia. That's still safe, right?
Yeah, yeah, Bannerman well, they even had a scare. Bannerman and Paladin are in Namibia, but they even had a scare with it was just badly reported. The sort of energy minister was saying there they'd consider taking free positions in mining companies, and that, but that was more in relation to they're at the moment they've got a lot of oil exploration offshore, and they were sort of having a think tank on how to ensure that they don't end up like some other countries that have squandered their like energy wealth, and so it just got completely taken out of context, and some of the stocks got smacked, but they quickly recovered. So yeah, it's reasonably stable, but I'll sleep a lot better when I'm completely out of Africa in terms of sort of mining and energy exposure. Yeah, I did have a decent position as well in DRC with Alphamin, and yeah, it's not much fun being in the DRC, Nigeria, and you never know what you're going to wake up to.
Yeah, no, that's why I like Canada, and I don't know, Canada uranium pretty solid there. Appreciate you keeping us grounded. Like this is so helpful because the news cycle is just full of just like if you just listen to certain news outlets, you'd be led astray like crazy, right? Like you'd think that oil's going away forever, and we're all going to run on renewables and whatnot. So it's just so helpful to keep people grounded. So appreciate your time.
No worries. Always happy to come on and talk about the stuff. I love it. Love to chat about it all day.
Yeah, that's great. So where can people go to learn more and stay on top of your updates and your research?
Substack. So that's where I pretty much do all my writing now. Yeah, I occasionally jump on Twitter, but yeah, not very active there anymore. So mostly Substack, and I just send out a free email every week with something interesting I've like read, listened to, some interesting charts and something I'm kind of pondering. And so that's like a free weekly email I do off my email list if anyone wants to hear some more.